Hello, welcome to Business Incorporated. I'm Ladi Williams. Coming up on the program. European Parliament defines strategy for a new EU-Africa partnership. Suez Canal reopens to traffic after giant ship is freed. Central Bank of Kenya upbeat on COVID-19 vaccine as a lift to the economy. Let's get the show started now with market numbers. Here on the African continent, major markets we track were all in the green, while the GSE in South Africa rose 0.12%. Nigeria's NSE was marginally higher by 0.04%. In Egypt, the EGX 30 advanced 0.38%. And Kenya closed the Monday session negative. There was a similar picture in the Middle East where major markets we track were in the green at intraday. In the UAE, Abu Dhabi's index jumped the most by 1.49%, while Dubai's index was higher by 0.23%. Elsewhere in the region, the Qatari index advanced 0.56%, while Saudi Arabia's index rose marginally by 1 basis point. And European stocks advanced today following a recovery from market jitters in the U.S. Late last week. Conrad is standing by now on the trading floor of the Frankfurt Stock Exchange. Hello, Conrad. Great to have you.
Good afternoon, Ladi. Thanks for having me back on Channels TV.
Good afternoon. So the IFO employment barometer for Germany rose sharply in March to about 97.6 points, up from 94.5 points in February. And that's the highest level since February 2020. Is the labor market starting to recover despite the lockdowns?
Yes, sir, it is. Of course, what's also playing into this is the weather. After a very, very strong winter in February, the month of March came along with a couple of sunny days, which allowed many people to return to the labor market, in particular, of course, in the building sector. Also, in many German manufacturers, the people in charge of employment are willing to hire again. Still, we have to keep in mind something. Since the corona pandemic, since the crisis started, we have to take the headline unemployment numbers with a huge spoonful of salt, because the real impact of the crisis in the labor market really can be found in short-time work schemes, or furlough schemes they're sometimes called. That's when, the government gives employers money so that they don't sack people, even if they don't have a lot for them to do. These short-time work schemes were really increased quite significantly during the crisis. For example, at the moment, 2.4 million people are in such schemes here in Germany. That's up from 2 million in October. If we didn't have these schemes, the situation on the labor market would be much, much worse.
And Archegos is still trending. The fund seems to be growing. Now it's being reported that the total amount of losses banks are facing could be up to $6 billion. Are any of the German banks involved in this? And what about Deutsche Bank?
Well, Deutsche says it has significantly de-risked its exposure to Archegos Capital stocks, and that it doesn't expect to incur any losses on its Archegos exposure. So this time, obviously, the risk management procedures at Deutsche Bank really worked. Other German banks are not reported to be involved in the affair, at least not with a direct business relationship with Archegos. What we don't know, and what of course nobody really wants to talk about, is whether and how much the significant losses of certain stocks might have affected certain banks or fund managers. If you take, for example, the shares of the media company CBS Viacom, or I think Viacom CBS it's called, the share price of this company on Friday was down 27%. And on Monday, yesterday, these shares lost another 6.7%. So if you owned this share last week, you are now significantly poorer, at least if you did not sell the share.
Well, that's a big loss there. Well, Europe's startups want a sovereign tech fund. And at a meeting today with the EU's Innovation Commissioner. Startup founders have lobbied for a €100 billion fund to support the industry. Why is such a fund needed, and will the firms get the money?
You know, Ladi, there's a good chance that they will, because a boost in spending on new technologies and on tech startups is something that Europe really needs, because this culture of investing, in risky, uncertain business ideas that have to do with tech, that's really very much an American thing. Here in Europe, we have many conservative investors who really want to be very sure of what they do before they start spending. This, of course, has to change, and it might change now if the public sector, the state, is willing to support this and also give money to such a fund. Private investors have an incentive to spend big as well. And that is the potential of this €100 billion investment fund. There's another potential for the European Union, which might shift, from being in charge of competition, from being in charge of trade policies, to taking a more assertive, direct approach to supporting the economy in Europe. It can help, tech startups to become global tech giants. This is the dream they have, and with such an amount of money, €100 billion, they might be able to really do it.
Yeah, that's actually a big number. All right, Conrad, thank you so much for the update, and do enjoy the rest of your day.
Take care, Ladi.
Thank you. And now to London, the FTSE 100 index of blue chip shares is holding its gains as investors shift out of bonds and into equity markets. Let's talk to Juliana now for updates from London. Hello, Juliana. Good to have you. How's the market looking this afternoon after FTSE 100 opened high this morning?
Good afternoon, Ladi. Yes, the FTSE all-share opened in positive territory at early trading, and it remains in positive territory at intraday. As you were saying, bond yields have got their third consecutive day of gains, and we are seeing a little bit of a rally in travel and leisure stocks. The British Airways owner IAG, their shares are up 4.5%, and this follows positive comments by Prime Minister Boris Johnson yesterday, saying that the vaccine rollout is going according to plan, even though there's been that spat with the EU and the delays from India over the AstraZeneca vaccine. But because we have gone into our third phase of the lockdown, it does appear as if we are on task to start international travel again on the 17th of May, which means there will be bums on seats on the airlines, which is why we saw that rally there. The FTSE all-share is up 0.45%. The FTSE 100 up by that same amount, and the domestically focused FTSE 250 is up by 0.49%. In the currencies market, the British pound is down today on the US dollar by 0.03%, up though on the euro by 0.20%, and also trading up on the Japanese yen by 0.44%.
I'm sure Britons can wait to travel again. Well, bosses at Goldman Sachs have been sending sympathy snack boxes to overworked junior London bankers in response to complaints of inhumane 100-hour a week that have affected their physical and mental health. What are you hearing about this?
Yeah, it's pretty much a comical headline, but a very, very serious story, especially given there were two quite dramatic deaths. 4 junior bankers in London. I believe one of the first one was in 2013 when a junior Merrill Lynch Bank of America analyst complained of working hundreds of hours. In fact, I believe he worked 72 hours non-stop, and he was found dead of an epileptic seizure in his bathroom. Then in 2015, a Goldman Sachs analyst, 22 years old, had also complained of being overworked, overtired, and he took his own life. Earlier this month, a leaked report from, I believe, about 13 Goldman Sachs junior bankers revealed that they were suffering the same issues. You know, they were working 100-hour weeks. They were basically being treated terribly by senior junior staff. And because of the bad history that a lot of these investment firms have had, Goldman Sachs bosses have decided to, celebrate their staff by giving them these packages and also guaranteeing them a 4-day holiday over Easter, which means they'll have Good Friday off, Easter Monday off, as well as the weekend. But because of the high-flying position, many of them complain that they're not sure that this is guaranteed, because on some Saturdays and even on some Sundays, you've got pretty, let's just say, high-flying businessmen who like to have their attention. But it is being taken very, very seriously. But it does pale in comparison. I believe workout equipment of up to £2,000 was given to junior bankers at another competitive firm. And if you're lucky enough to work for Credit Suisse, you would have received $20,000 in bonuses. So yes, it's a comical headline, but a very serious, almost deadly issue.
Yeah, quite serious, I must say. Well, the UK government has restated it is considering all options to keep Liberty Steel's UK plants and jobs afloat, including nationalisation. How's this going to work?
Well, we're not sure just yet, but Kwasi Kwarteng, the business secretary, has doubled down on the government statement, which is they do see Liberty Steel as pretty much a national asset, and they will do whatever it takes to try and protect the thousands of jobs that could potentially go under if Liberty Steel is collapsed. Now, they did ask the government last week to try and bail them out to the tune of £172 million after the collapse of their biggest backer, Greensill Capital, which, by the way, is a huge story in the UK at the moment, involving the former Conservative Prime Minister David Cameron and the way he tried to lobby money from the Treasury to save the company. But it did go into liquidation. Liberty Steel is badly affected. But over the weekend, the government rejected the financial calls, and the government has said it's because of the Gupta's family's handling of the company. It's far too opaque, they said. And Kwasi Kwarteng this morning said it was impossible for the government to put money into a black box. So the conversation and the negotiations are still ongoing. Again, the government know that the steel industry in the UK is of vast importance, particularly to those regions that Boris Johnson has promised he would be levelling up, so in the northern regions of England. But as we say, the first bailout calls have been rejected, so we'll have to wait and see what the Gupta family come up with next.
All right, Juliana, we'll keep tracking that. Thank you for the update and enjoy your day.
Thank you.
Thank you. Well, shares in Asia Pacific mostly rose today as investors watched movement in shares of Japanese financial services firm Nomura following their Monday plunge. Nikkei 225 in Japan rose 0.16% to close at 29,432 points, while the Topix index shed 0.78%, finished its trading day at 1,977 points. Meanwhile, mainland Chinese stocks were high on the day. The Shanghai Composite gained 0.62% to 3,456 points, while the Shenzhen Component rose 0.85% to 13,888 points. Hang Seng Index in Hong Kong was about 1% higher as of its final hour of trading, while South Korea's Kospi gained 1.12% to close at 3,070 points. Shares in Australia edged lower as the S&P ASX 200 declined 0.9% to end its trading day at 6,738 points. And U.S. stock index futures were mixed during the early morning trading after the Dow Jones Industrial Average closed at a record high. Futures contracts tied to the Dow advanced 78 points. S&P 500 futures hovered around the flat line, while the NASDAQ 100 futures were in negative territory. During regular trading, the Dow erased a 160-point loss to close 98 points higher, and the S&P 500 and NASDAQ finished in the red, dipping 0.09% and 0.6%, respectively. And oil prices fell in early trade today as shipping traffic resumed through the Suez Canal after days on hold, and attention switched to an OPEC Plus meeting this week, where the extension of supply curves may be on the table amid new coronavirus pandemic lockdowns. Brent crude was down 0.2% at $64.83 a barrel, after gaining 0.6% on Monday while U.S. oil was lower at $61.55 a barrel, having fallen 1% in the previous session. The likelihood that the disruption will prove minimal, the market is turning its focus to Thursday's meeting of the Organization of Petroleum Exporting Countries and Allies, including Russia and Vienna, collectively known as OPEC+. And domestic commodities market update is next after the break. Do stay with us. Welcome back. On our commodities market update today, we'll be talking about wheat. Wheat is one of the world's most commonly consumed cereal grains, and it comes from a type of grass that is grown in countless varieties worldwide. Globally, wheat's consumption has increased annually by 1% over the last 5 years, but is projected to increase by 1.9% in 2021 to 759 million metric tons. Joining me to talk more about this is Pelumi Oshode, a research analyst at Financial Derivatives Company. Hello, Pelumi. Great to have you.
Hi. Thank you for having me.
Good afternoon. So the CBN has reportedly announced a plan to reduce the import of wheat by about 60% in 24 months. You know, considering the relative importance of U.S. trade with Nigeria and that a Nigerian is the Director General of the WTO, do you think that this policy initiative is feasible in an environment of increasing global trade and the protocols of the WTO?
Like it's generally said, the world is a global village, and economics are actually integrated in times like this. And of course, with this Biden administration, where multilateralism is actually replacing bilateralism, so we see that there is easy flow of both goods and services and even capital among economies in the world. And also the fact that the DG of the World Trade Organization is currently a Nigerian who, of course, is an advocate of international trade. In my opinion, I think this policy directive by the Central Bank is not appropriate at this time. What I would have suggested is probably see how we can scale up our domestic capacity and see how, like you might rightly mention also the fact that we have different types of wheat, and in Nigeria, majorly what we produce here is the hard wheat, and different types of wheat are used for producing different types of commodities. So bearing this in mind, scaling up our production process to help us to at least produce enough of the particular brand we have, which is the hard wheat, that can be enough for domestic production. That will of course ease the cost of wheat or cost of input for those using it for production of some household staples, and this will also help us in competition to help us compete with other economies in the world, and we can bring our wheat to not just African markets, but even global markets where we can compete with other Asian and compete with Canada, compete with the United States and other European countries that produce wheat. So I feel if we can work on developing our domestic capacity, automatically it would reduce importation rather than just saying, okay, we want to automatically. The last time that happened, it led to smuggling because we had shortage of wheat in the country for about a year, and that led to smuggling, and that of course inflated the price of wheat above the ceiling.
All right, so the price of a bag of flour is expected to increase to about 15,000 next week, and the cross elasticity impact on substitutes like yam, Gary and others has been a major catalyst for food inflation. How do you expect this to impact wheat-related food prices and consumer demand for flour and its substitute?
Like I rightly mentioned, we have different types of wheat used for different purposes, and the demand for these commodities actually increased as economic activities has increased, and this, of course, is expected for rational household consumers to augment or let me supplement to substitute this wheat-related produce for produce such as rice in place of pastilles and probably yam flour in place of semovita, just to sort of save some money because of household income is actually depressed. So we will see an inverse relationship between the demand for wheat-related products and other products like other substitutes rather. Excuse me. So we'll see as price of wheat-based products actually increase. Consumers generally will try to see if they can ration their spending and probably consume commodities whose price increase is not as intense or as high as that we see in wheat-based commodities.
Okay, so is the spike in global wheat demand due to demography and population increases in developing countries, or is it due to the possible end of the pandemic and a recovery in global economic growth? And do you think this increase is sustainable, or is it an aberration?
Yeah, I would say that it's actually a combination of both. We've seen this increase in demand for wheat as a result of increase in population growth, especially in developing countries as we have in Africa and Asia. Also, we've also seen that the fact that there's ease of lockdown, there's increase in global economic activities has also raised the demand for wheat globally. So these factors also coupled with the fact that wheat-based produce are actually easy to produce and has changed, consumption pattern of household has changed and demand for these commodities have increased more recently than we had decades ago. So these factors put together actually actually factors that pushed the demand for wheat globally. And of course, it's not an aberration. We see this to be consistent. In fact, according to projection, according to Economics Intelligence Unit, they project that in 2022, the demand for wheat will increase to about 22.3% as against 1.9% that we have this year. So we expect in the future, in the near term, and both in the long run, that demand for wheat will increase because of the multiple use of wheat in production processes.
All right, we'll keep tracking that one now. So, Pelumi, thank you so much for your time on the show. Pelumi Oshode is the research analyst at FDC. Thank you so much.
Thank you.
All right, so members of the European Parliament have adopted a wide-ranging strategy for the new EU-Africa partnership, which emphasizes that human development must be at the center of future EU-Africa relations, prioritizing education, including teacher training, reducing early school leaving, and concentrating on the inclusion of girls. Members are also calling for cooperation on issues such as the green transition, energy, digital transformation, sustainable jobs, good governance, and migration, as already identified by the Commission and the European External Action Service. MEPs underlined that the EU-Africa relationship must move beyond the donor-recipient relationship and cooperate on equal terms as part of an EU-Africa strategy that empowers African governments to achieve the UN Sustainable Development Goals, curb climate change, and foster gender equality, among other targets. To achieve this, the MEPs call for substantial funds to be earmarked for the SDGs and the upcoming external financial instrument, the NDICI Global Europe. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.